Gold has had this incredible grip on us for, well, forever. It's been money. It's been a symbol of power, a safe place to park your wealth. But when you look past the ticker symbols and the mythology, there's a much grittier story. We're talking about pure geology, absolutely massive machines, and digging some of the most expensive holes in the ground you can imagine. Today, we're going to dig in and see how this incredibly stubborn metal actually gets from deep inside the earth into a shiny bullion bar. Okay, so first things first, what are we even talking about here? On a fundamental level, gold is just an element on the periodic table, AU. But with 79 protons packed into its nucleus, this thing is just built to last. It's incredibly stable, and that one simple fact is the foundation for everything else that makes it so valuable. So here's how we're going to break it down. First, we'll look at what makes gold so special. Then we'll trace its absolutely wild journey from the stars down to the earth. After that, we'll check out the miner's playbook, how they actually get it. Then we'll get into the investment side, mapping the life of a mine. And finally, we'll learn how to decode the numbers that really matter. All right, let's kick things off with the enduring element. We need to understand the very specific physical properties that gave gold its legendary status long before anyone had even thought of a stock market. What's so wild about gold is how all these different traits play together. It's chemically calm, it just doesn't rust or corrode. That's why a treasure pulled from a 3,000-year-old shipwreck can still shine like it was made yesterday. It's also ridiculously heavy. But here's the crazy part. It's also the most cooperative, the most malleable metal we know. You could take 1 single ounce and hammer it out into a transparent sheet that would cover a small room. And on top of all that, it's an amazing conductor, which makes it absolutely essential in high-end electronics where failure is simply not an option. Now here's a mind-bending fact. Before gold was ever in the Earth's crust, it had to be created somewhere. And its birthplace wasn't our planet. No, it was forged in the most violent, most extreme events that the universe has to offer. That's right. Think about that for a second. The gold on our planet, in our jewelry, in our technology, it was all created in the insane heat and pressure of a supernova, or even crazier, the collision of 2 neutron stars. It is literally stardust, which then got scattered across the galaxy and, over billions of years, became part of the same dust cloud that formed our solar system. And even when it got here, it didn't exactly make things easy for us. In the Earth's crust, the concentration of gold is just 4 parts per billion. That's an almost incomprehensibly small number. As the source material puts it so well, that's really just geology's polite way of saying, good luck finding it. And if you want to put that rarity into perspective, just look at this. After thousands of years of human civilization, empires rising and falling, all chasing this stuff, if you took every single ounce we've ever pulled from the ground and put it in one place, it would fit into a single cube just 22 meters on each side. It would easily fit under the Eiffel Tower. That's it. That's all we've got. Okay, so if it's that rare and that hard to find, how in the world do we actually get our hands on it? Let's open up the miner's playbook and see how they actually retrieve this cosmic treasure. Mining pretty much comes in 2 flavors. You've got your open pit mining, which is for deposits found close to the surface. This is a game of massive scale, literally moving mountains of rock to get at gold that might be in very low concentrations. And then you have underground mining. This is more like surgery, chasing narrow, rich veins of gold deep in the earth through a complex maze of tunnels. It's less about brute force and all about precision engineering. And this work is happening all over the planet. As of right now, China, Russia, and Australia are leading the pack in production. You see, nature scattered gold pretty unevenly across the globe, and these are the regions that really truly won the geological lottery. All right, let's pivot, because for an investor, a gold deposit isn't just a rock in the ground, it's an asset, and it has a very distinct life cycle. Understanding this journey from discovery to depletion is absolutely critical to understanding the risks and the potential rewards. The whole thing starts with exploration. This is the high-risk, high-reward hunt for a deposit which can take years. If you get lucky, you move into development, where the actual mine gets built. That's followed by the long production phase, where the cash starts flowing. And eventually, every mine runs its course and enters closure, where the site is cleaned up. Each of these stages is a totally different ballgame for an investor. And this classic curve illustrates that journey perfectly. You see that really early stage, the high-flying speculation, where a single good drill result can send a stock soaring. That's often followed by what they call the orphan period, a tough phase where you need a ton of capital just to prove you've got something real.
Then, finally, as the mine gets built and starts producing, you enter a much more stable, predictable investment phase that attracts the big institutions.
And just to hammer home how risky that earliest stage is, get this. The odds are staggering. Fewer than 1 in 1,000 exploration projects will ever become a producing mine. This chart breaks it down beautifully. You see it right there. That exploration phase offers the highest possible upside, but it's balanced by the highest uncertainty and the biggest chance of complete and total failure. As a project moves along that timeline into production, the risk goes way down, but so does that explosive 10-baggered growth potential. So if you're going to play in this world and evaluate these companies at any stage, you absolutely have to speak the language. Let's decode a couple of the essential terms that separate the geological dreams from the profitable realities.
Okay, this one is probably the most important distinction you need to get right. Resources versus reserves. Think of it this way. Resources are a geologist's best guess. It's what they think might be down there. But reserves, that's the portion of the resource that has been proven to be economically and technically mineable right now. Resources are exciting, but reserves are what actually pay the bills.
And this diagram, the McKelvey box, is basically how the pros visualize that exact process. It helps organize everything. You start way over on the right with these hypothetical ideas, where you have very low certainty. The goal is to move that deposit up and to the left, into that top left corner, where you have a proven reserve, something with high geological certainty and high economic viability. As an investor, that's the journey you want to see.
Next up is maybe the single most important number for a producing mine, all-in sustaining costs, or ASC. This isn't just the day-to-day cost of running the trucks. No, this includes everything needed to keep that mine running for the long haul. Corporate salaries, replacing equipment, exploration to find more gold. Think of it as the mine's true, all-in, no-kidding break-even price.
And for you, as an investor, the math here is beautiful in its simplicity. The gap between the gold price and a company's ISIC, that's their profit margin, right there. In this case, it's a very healthy $800 an ounce. A company with a low ISEC is a resilient, profitable machine, especially in a high gold price environment. So let's wrap this all up. What are the big things to remember from this journey from exploding stars all the way to a balance sheet? Well, gold is timeless because of its physical properties, and it's incredibly rare because of where it came from. For an investor, the life cycle of a mine tells you everything about risk and reward. The difference between resources and reserves separates hope from reality, and at the end of the day, AISC is the ultimate bottom line. Look, understanding all these mechanics, the geology, the engineering, the finance, that's the first step. But actually turning that knowledge into a smart, sound investment strategy, that takes some deep and really specialized expertise. For anyone who's serious about exploring this further and really wants to navigate the opportunities in this pretty complex sector, the team at the Macro Butler provides expert guidance. You can reach out to them to learn more.